also be bad for the US.
Yeah.
It would cause inflation in both countries, and that's not good for either. So I don't think it's going to be that extreme, but it does pose a lot of question marks, that's for sure, around thing. I'll get into more detail when I talk about mortgage rates and how it
Sure.
could impact mortgage rates.
All right. Good evening, everybody. Today is January the 14th. Happy New Year. A lot of you might have noticed that we have something, a little cloud hanging around about Trump tariff funds coming on January 20th. What's going to happen? What should we be concerned about it? Would it affect the real estate? Everybody have opinion, but we will see as the time comes along, though. So a lot of changes, a lot of good stuff happening in the real estate market. Quite a bit of excitement compared to the last 3 years since February of 2022. Things are turning around. Just to let you know that this is typical a disclaimer that everything from is only for information education only. Make sure that anybody who's going to do something, make sure you got a qualified help from professionals only. And we don't take any responsibility. All investments carry risk. And it's crucial that you do your own due diligence and make sure that you're never guaranteed to make money. When you invest, you might even lose money. That's how it works. Just thought I should let you know. So a lot of people, a lot of Canadians, a lot of buyers have been sitting on the fence for the last 3 years. What were they doing? Nothing, waiting. What would happen? All of a sudden, the interest rate went up in March 2022 and onward. They're waiting for the interest rate to come down. And there are a lot of opportunities during the time when things were not that great. Prices do came down, owners become a lot more flexible, and so on. Though. So moving forward, a lot of Americans see the Canada as a land of opportunity. Blackstone invested $3.5 billion, and they see a large amount of return over dollars a week, 69 cents in a dollar. Other company called Heinz, which is from Texas, are acquiring a lot of real estate, and they are going to build a lot of apartment buildings on all major cities in Canada. And Americans, major Americans, looking at Canada as a great opportunity to invest. Maybe we have blinders on, but look at these big boys coming from US, by the way. And again, in the US market, Buffalo, New York is #1 place to invest, by the way. Just thought I should just throw some stuff today about American real estate. Look at this piece of property. If you want to buy a piece of property, but a quarter acre of land, 5 bedroom, only 455,000 taxes. Can you look at this type of deal in Canada? Perhaps not. 455,000. Just thought I should mention to you. It was on somewhere on the internet. I just thought I should steal it and share it with you guys. I'm going to skip this one for the time being. There is, are you a wealthy Canadian? Everybody is looking, driving towards, am I wealthy? What does the wealthy means? How do you define wealthy, by the way? And just thought I should just share with you what exactly is wealthy. Well, there's something called nest egg, fancy being saying, hey, how much investment do you have? And there's something called 4% rule. If you need about 60,000 a year, you need to have about $1.5 million assets. And also you need to look at the cash flow freedom. How much money do you getting every month? And if your expenses are a lot less than your income, you're okay with it. Just thought I'd just share with you. Canadians, uncertainty, inflation, and most of the Canadians are feeling that thing. Hey, listen, we could be broke. Only there are 24% of Canadians say, hey, we cannot manage with $500 cash flow. Most of the Canadians are worried about their income. And 28% Canadians are borrowing a lot of money on the credit card. And this is a bit of a nightmare credit card. It's gonna might take a little second to scoop it. 90% of Canadians are working on a side job to make the ends meet. This is a bigger number of people who are in between a middle class, or you can say new things. And a lot of women are doing 2 jobs to make it's difficult. So what are we doing? One of the most expensive we don't see. There's #1 industry who spend the most money on advertisement. and people don't realize it. Anybody like to know, like to share which industry is that? They spend the most amount of money on advertising in any other industry. There's one industry only. That is credit cards. And they make tons of money. Typically, Canadians have a lot of money, about $8,000 credit card. If you are paying minimum $250 per month, you're going to be paying about $5,300 on the interest only. So talk to people like David Grossman, hey, can I consolidate all the payment into one payment? And it is very expensive. And don't make the banks richer, especially when it comes to even line of credits. Check it out, sit down with somebody, go to experts, speak to them. It's going to save you a lot of money, especially the fellow Canadians. Now, this is a young guy. I have never ever figured out the cryptocurrency, but this guy is making tons of money. He's the second richest man in Canada. He was in prison for 4 months and he made more money. And I'm sure some of you have heard his name. Just thought I'd just share it with you. Just out of curiosity, people say, I want to make big buck very quick. Now, a lot of people are looking into it, but be aware of it. I have no idea. I have no clue whatsoever how this thing works, though. So we're going to be talking about the trigger rate today. We're going to be talking to David. He's going to be discussing us what is a trigger rate means. Now, 1.2 million Canadians, welcome to 2025. And this is going to be a problem. A lot of Canadians are going to be paying about $513 per month more to carry mortgages. They used to have below 1%. Now they're going to renew it. The best thing, again, speak to people like Randy Goodman, David Grossman, Jerry Hoganhow, Jyoti Chaudhary, or other professionals. Get a guidance. And you'll be shocked that there may be some certain ways to keep the payments intact or maybe create another income of other income or so. We got a strong job growth in last month, by the way. Canada created 91,000 jobs. That's a good news. Where the most jobs created, more or less, educational is the number one industry, transportation, warehousing, health, again, finance, insurance, real estate, and rentals, about 16,000 jobs. So that's a good news to begin with. So moving forward with this thing, so David is going to be talking to us about what is a trigger rate and what should Canadians do, about 1.2 million Canadians should do when it comes to renew their mortgage. My number one advice, my recommendation, or my opinion, get a professional opinion. David, it's all yours, my friend.
Okay, so first of all, the trigger rate is what happens when if you're on a variable rate mortgage and you start to go into a negative amortization because some of the variable rate mortgages out there, the rate is fixed. So if you borrowed at a variable rate when it was low initially, and you had a low monthly payment and the rate keeps going up, but your payment stays the same, eventually you're going to have a negative amortization. The bank's going to call you up and say, okay, we have to adjust your payment. So that's what the trigger rate is. And some people got those phone calls. Some people didn't. In some cases, if people were under stress, the banks would actually just capitalize that negative amortization. I talked to people who the mortgage was just growing. So banks were doing some things to help people out. They do not want to put people into foreclosure or power of sale because it's going to wreak havoc. And they've been successful through the Bank of Canada's actions in reducing rates considerably. Like if your mortgage renewed a year ago, you were up around 6%, whereas now you're in the low fours. And people are sitting and they're waiting and they're thinking that they're going to go a lot lower. And I don't think they are going to go a lot lower, especially now with all this instability and the threats coming from the US with the trade wars. That could put inflationary pressure. And when there's inflationary pressure, rates have to go up. um, to try and counteract that. So there's pressure to drop rates, and the variable rate, the overnight rate, or the Bank of Canada rate, will probably, there's about a 55% chance that it will drop by another quarter point at the end of this month. But beyond that, maybe another quarter point beyond that by the end of the year. It's really hard to say because we don't know what the impact of these tariffs are going to be yet. They say a stagflation is a concern, right? Stagflation. So when the economy's stagnating or you have negative growth, because now you've got unemployment and things are slowing down, and at the same time you have upward pressure on prices. But that threat is also in the U.S. So I don't think it's going to be as bad because I don't think they're going to implement a full 25% tariff here in Canada. But I think the U.S. really wants to see Canada clean up the drugs that are floating south, and also illegal aliens that are getting into the U.S. So when Mr. Trump, President Trump, is satisfied that Canada is doing some things, I think maybe he'll ease up a little bit. I don't think it's going to be that dramatic, but it certainly is putting some question mark on what's going to happen. But in terms of rates, this is a good reason why you might just want to lock in if you can get a good rate in the low fours right now. Maybe just lock in for 5 years, because if rates have to start going up again, variable overnight rate in order to fight inflation, the variable may not be as attractive as we thought that it might be looking ahead a year or 2 years. Um, so that's the summary. Did I miss anything? Was there any other questions? The other thing I wanted to say is that if you borrowed money at 2% a couple of years ago or 3 years ago, you were stress tested at 5.25. So unless you lost your job, you should be able to pay your mortgage still. And again, compared to what it was a year ago, 6% or higher, being in the low fours, that's not bad. So um, time to get moving, time to start buying properties, look for deals, and yeah, let's hope things are going to keep looking up.
All right. Thank you, David. Appreciate it. Once
Well,
again,
thank
David
you.
Grossman or David at rockyourmortgage.ca. That's our email, 416-876-2031. And he's going to be here taking a few questions. David, if you can answer a couple of questions on Q&A, thank you.
Thank
Now,
you.
talking about other stuff, we're going to move into the real estate. What are we forecasting for next year? What's going to happen to the sales? What's going to happen to the prices? What will be the approximate prices in 25 when compared to 23? These are the projections based upon some numbers given on different levels. And we're going to be also talking about the ultra rich Canadians. What exactly is happening? The properties over 3 million, 5 million are going crazy in this market compared to the real estate. So again, real estate is very much local, and we are going to have our guest speaker, my sister, Randy Goodman. She is 11-time, 12-time international bestseller, and she is the award-winning real estate broker for many, many years. And here is the one. She's going to give us all the information about what is going to happen in 2025. What can we expect? Is there going to be a huge demand? Is it the market adjusting? And again, some other political stuff going to happen. Randy, it's all yours, my friend.
Thank you, my brother. Thank you for having me, and Happy New Year to everybody. It's starting off a nice, fresh new year with some great interest rates. So who could ask for more? Okay, so REMAX expects the national average price to rise 5% in 2025. It's projected that sellers will dominate, and Royal LePage predicts declining interest rates and new lending rules will bring buyers back to the market. Detached homes and condos expected to rise in price by about 7% and 3.5% respectively. The belief is that the prices have hit bottom right now and will only go up from here. So now is the time to get into the market. Q1 of 2025 is expected to have a 2% increase in home prices with another 1.5% in Q2 and then Q3 with another 1% in Q4 of 2025. Current interest rate with the Bank of Canada is 3.25, their rate. Mortgage renewals may not take as much of a hit as we thought earlier in the year or last year. With rates coming down and people having been already stress test, like David was saying, when they got their mortgages, they may pay a little bit more, but it won't affect as many as we initially thought. The interest in getting a higher price on their home will cause more activity in the market. Some may have to sell because of the mortgage payment increase, and then we have increased buyer interest. So if you wish to discuss this or getting into the market, happy to chat with you. And then I had the market stats open. Navtej was already mentioning some of the numbers, but December's numbers, if you want to compare December 2024 to 2023, as far as the sales go, they were pretty much the same, not a big change there. New listings were up about 20%. And days on market still about a month. And the average price remained relatively the same. So there wasn't a heck of a lot of change going on there. Of course, in the 905, probably the biggest change was the condos as far as sales go, but really wasn't a heck of a big change there. So that's my report for now and for the next month. Thank
Thank you, Randy. Randy Goodman, 647-284-7601. RandyGoodman.com is the website. She's one of the top-notch broker and I've known her for many, many years. And once again, she could be one of the realtor of your choice. Now, bankruptcies are taking off like crazy. Most of the bankruptcies are in the real estate sector. Insolvencies, a lot of big builders, developers are in trouble. And again, Ontario was the one who did all the bankruptcies. The pain will continue for another year or so, but again, it is sorting it out as we speak, though. Now, whenever the market goes upside down, a lot of frauds start happening. People start stealing your title. They trick the transfer to exchange of a foreclosure fraud and mortgage fraud. Just to lighten up about the frauds in Canada, we like to bring our attorney or real estate lawyer, Jyoti Chaudhary. She's the lawyer from India, lawyer from UK, lawyer from Canada. So she understands this much better. Jyoti, it's all yours, my friend.
Thank you, Navtaj. Hello, everybody, and Happy New Year. We ended last year on a positive note that 2025 is going to be better, and hoping that we see better real estate prices and better, boom in the real estate market than it was in the last year. Now, I'm going to be talking about mortgage fraud. Last month, I talked on the topic of title transfer fraud and the ways in which one can protect one's property, especially if there is no mortgage on the property and you're mortgage free. Today, I will speak on some indications of fraud in real estate transactions and mortgage fraud and how to recognize the red flags in both. Because as soon as the markets go up and everybody is trying to buy good properties, everybody needs a mortgage. I mean, most of them will need a mortgage. There will be very few buying properties without a mortgage. So these are essential things to consider. Now, what is mortgage fraud and when does it occur? It occurs when somebody deliberately misrepresents information at some point or another during the loan application process. This can mean falsified income statements, false letters of employment, false identification, property information, ownership, and or occupancy information. So basically, it could be more than that, but these are the main indications of mortgage fraud. And it is easily recognized in real estate transactions because it is easier to commit because of the simplicity of the real estate process. Most Canadians want to be homeowners, and we know that. And fraudsters prey on vulnerable consumers when they're trying to buy a home and to make that dream come true, that the dream of home ownership. So there is income fraud. This is one of the most common types of mortgage frauds. It is simply when a buyer lies about the level of income and debt to obtain a mortgage loan. They may inflate the salary, make up an employment, or fabricate pay stubs. Now, I know that everybody goes through a process of getting approved for mortgage, but you have to look out for the signs of mortgage fraud and how to spot the characteristics of mortgage fraud. Consumers should be aware of the red flags that may indicate a mortgage fraud. The existence of a red flag does not mean it is definitely a fraud, but it should be cause for suspicion. If there are more than 2 or 3 red flags in a transaction, they should be taken very seriously. So the common red flags are someone offers you money to use your name and credit information to get a mortgage, or you're encouraged to include false information on a loan application, or you're asked to leave signature lines or other important areas on a loan application blank. The loan amount on the mortgage is significantly higher than the value of the property. The mortgage has been refinanced several times, and in each instance, the amount of the mortgage has increased. The seller or the investment advisor discourages you from seeing or inspecting the property offering to purchase. So basically, these are all red flags that one has to be aware of. Maybe you're getting into a property, which is not owned by the person you think owns it. You need a good real estate lawyer to guide you through the process. You need a mortgage broker who is, conscientious enough to tell you that this is not the way to go about it and guides you through the process. And a mortgage fraud also occurs when someone uses your stolen identity, fake documents, and identification to change the title on your home. So basically, everybody has to be really careful with all this changing scenario with the US talk of US tariffs and inflation, and maybe some dropping mortgage rates for some time. People will be venturing into the real estate market, and hopefully they're not taken for a ride. That is my take for today.
All right. Thank you, Jyoti. Really appreciate it. Once again, Jyoti Chaudhary,
You're
she's the real estate lawyer in Toronto. You can call her directly at 416-880-8759 or jclawcorp.com is the website. Now, moving forward with our next thing is our gentleman who handled the most difficult aspect of it, the taxes. Whether we like it or hate it, when you got pre-tax money, before you get the money, the taxman takes the money away from you. And especially when it comes to real estate investments, there are so many little things one can look at it. And Jerry Hogenhout has been around for a long time. He is also a also a real estate investor himself, so he knows exactly what real estate investors go through. So today he's going to be enlightening us about what is it supposed to. Oh yes. So these are the three red flags one has to be careful with when it comes to Canadian investors. Jerry, it's all yours, my friend.
Hello, everyone. You can hear me now, I'm
We
assuming?
can hear you loud and clear.
Great. Thank you once again. Happy New Year, everybody. Great to see everybody here tonight. A couple of comments that you've made now that I'm going to expand on. The red flags I'm going to talk about. But as far as CRA wanting all our money, oh my God, the last year has been nothing like I've ever seen in 35, 40 years of tax as far as the number of audits they are doing. They are really looking at the tax system to get more money. And I don't know if you guys noticed, but when the little kerfuffle happened with Trudeau and Freeland, our deficit was supposed to be 40 billion, but it's 60 billion. One of the comments they made was that they just weren't getting enough money out of the tax system. So they've really upped their game as far as the number of audits and the red flags they go through. And speaking of red flags, one thing I should share, when we file tax returns, it's really, when we're ready to send, I hit send on my computer. So it's literally my computer sending it to the CRA computer system. And the tax return goes through algorithms. And those algorithms pick up these red flags. So what are red flags? And higher than average expenses in certain categories. There's all kinds of things. Your sales don't reconcile. Your sales on your tax returns don't reconcile with your sales on your HST filings. There's many different flags, but when we send that tax return through the algorithms, we know what they're looking for, and that's they're trying to catch red flags. And when they do catch a red flag, when they go through those algorithms, they literally, the tax return in simple terms ends up on pile 1 or pile 2. If the algorithms catches red flags, it lands on pile 1, which means it's telling CRA that a human being better look at this tax return and review it within the 3-year limitation that they have. So they only have 3 years, not 6, not 7, 3 years from the date of assessment. When I hit send, it goes through their computer spits out a notice of assessment. It has a date on it. That's a very important date. They only have 3 years from that date to challenge anything or to deal with those red flags. If they don't deal with your tax return within 3 years, nothing happens. Whatever happened, whatever you did, you got away with. So it's important to realize that when we send these returns, it's either going to land on pile 1 or pile 2. Pile 1 will basically get audited for sure within a 3-year period. Audit 2, it got through the algorithms, and CRA can randomly pick at that pile throughout their 3-year period. So that's, we want to make sure those red flags aren't sticking out too loud and proud when we send in the tax return. I also want to touch on, as you probably most of you know, there was a rule change on the capital gain inclusion for property sold after June of last year. And, that was a big kerfuffle back then. It still is now. But it's never passed law. It's never been passed into law. So as you probably know, they prorogued Parliament when there was this $400 million scam going on that nobody would provide documentation for. So nothing. So they tried to pass that law, but it didn't get through. And now Parliament's prorogued again till the end of March. So the legal passing of that 2/3 capital gain inclusion rate has not come into law. And where it's a problem is CRA is still taking the position that if you sold a property after June of 2024, you have to include 2/3 of that gain. If it's a corporation, all of the gain is 2/3 included. If it's a person, you have a $250,000 at 50-50 before you have to include the 2/3. So there's a kerfuffle here. It's not law, but CRA is telling people that they have to pay the money. At least that's what they're telling us. And we as practitioners are going, no, it's not law. You can't do that. CRA can't make the rules. The government makes the rules, and they haven't made that rule yet. So it's going to be interesting to see how that plays out. Hopefully nobody's in that position to get caught. But if you did sell a property between June and December of last year, and you're going to get caught in that, be careful. Don't let them take 2/3. Don't let them include 2/3 of that gain just yet. Other things I just wanted to mention, we're seeing an unbelievable amount of audits on the CURB and the CRB, the Canada Recovery Benefit, and we are seeing just mind-boggling situations where I'm getting clients and they're saying, hey, so I got a notice from CRA, they want $36,000 back of CURB or CRB. And I look through the file and I'm like, no, you qualify for this. There's no reason to pay this back. And then we deal with CRA, and it's just incredible what we're dealing with. We're talking to CRA saying, hey, you're asking my client for $36,000 back. We dispute that, strongly dispute that. They qualify under all these qualifications for collecting CERB or CRB. And CRA doesn't have an answer. They refer us to the website. They go, oh, well, if you have a concern about that, go to the website. And I'm like, well, that's not the right answer. And I said, I have been to your website and the person doesn't, is qualifies for CURB. So what do we do? And it's just, we're in a kerfuffle. We're just, so that's another really frustrating thing that's going on with CRA and with clients. Could you imagine just getting a notice? The people that got CURB, usually were, either lower income or needed the money. And now all of a sudden they're saying, well, you need to pay us all back, everything back. And they're trying to do that, try to, work to deal with that deficit that they've created with the spending of all the money. So that's a real problem right now. Going through some other quick things, the extended the deadline for charitable donations. They felt, certainly the charities lobbied to say, hey, give people till the end of February to make donations. And the end of February too is the deadline for dividends. Okay, a lot of you with corporations, lots of tax advantages for using dividends. One of the big ones is that we have an option to not pay Canada Pension. I don't want to go into a long, deep dive on that, but Canada Pension, we're steering clients away from that. It is a big ripoff as far as I'm concerned, as far as the money that you put into Canada Pension. And they take, here's a simple example. When you're 65, if you've put in the maximum amounts of CPP, your very own Canada Pension account will have well over $1 million in it. And they're giving you less than 1%. They're paying you less than 1% of that money. And each year they're making whatever, 6, 7, 8, 9, 10, 11, 12, 15% on your money every single year. They do that every single year. And then when you die, they go, here's $2,500. I just can't describe what an unjust system that is. So a lot of our clients, we say, look, if you take dividends, you don't have to pay CPP, but take the same amount of money that you would put into the Canada Pension and create your own pension plan. Right now, a self-employed person, not through a corporation, if you just had a proprietorship, if your net income was $50,000, net gross minus expenses equals 50,000, the CPP went up again. You're paying over $8,000 of Canada Pension before you pay 1 penny of income tax. Criminal. Anyway, that's my little pet peeve on that one. Lots of U.S. investing. I know Nav touched on it already. Lots of Canadians looking south, and there's deals down there that's attracting a lot of people. I've kind of repositioned myself too. I've aligned with a U.S. structure person, a U.S. CPP, and a CPA and a U.S. lawyer to accommodate those clients who want to do U.S. investing. The price per doors, there are a lot of Cleveland. I belong to this real estate investment group, has a lot of members, 1,500 or so. They're looking at Cleveland. Texas seems to be the most popular place, Florida. There's a lot of activity by Canadians in the U.S. So as we look for investment opportunities everywhere, don't restrict yourself to Canada. So other than that, that's it, Nav. Thank you very much. Great to see everybody again. And thank you.
Excellent.
Thank you.
Just Jerry Hogan, ladies and gentlemen. Once again, Canadian Investment Services.ca 416-979-7426. And he's going to be here next February, I believe, February 11th. Thank you, Jerry. Appreciate it.
Thank you.
So, are there profits in flippings? Yes, they are. What's happening? Every single family home in GTA under the radar of flippers or builders or rebuilders. They buy it for 1.2 million, add up some value, sell it for 3 million, but 13 months period altogether, make approximately about $1 million. Is that helpful? Absolutely. In my opinion, go for it. So 2024, what happened? What industry went up, went down? What was a masterclass of resilience and creativity? There are a lot of opportunities. Again, the name of the game in real estate is cash flow. High borrowing costs, maybe they don't yield much. One of the most underdog properties, which a lot of investors don't look at, is industrial real estate. It is booming like crazy. Other aspect of it after COVID, urban versus suburban. Where should we live? And on that other part, adaptability, 24 was the year for people who are able to adapt it. And there's a double-edged sword when it comes to government incentives. Now they are giving away all kind of money. Tomorrow, on 15th of January, every Canadian who wants to build legally, morally, ethically another rental unit can get $80,000 at 2% interest rate for 15 years. And again, the short-term rentals, this is going to be again an area where they are regulating very heavily. Markets like Alberta has become the for the last 3 years is a place to go and invest. Be careful whenever you want to invest. Don't rush into it because everybody is rushing into it though. Those who are not familiar with it for the last 3 years, even now, stink bids work very well. This is where you make an offer. We have a YouTube video at flippingforprofit.ca. If you want to check it out, check it out. And it is a little bit of guidance about how to make a lowball offer to those sellers who have been trying to get into the properties for a very long time, and they're sick and tired because the property is not moving. So here comes the deal. What exactly happening in Toronto? Are the properties selling for asking price, or people are underbidding? How many properties are overbidding more than asking price? You'll be shocked that these are the numbers for December 2024 in GTA. In March, it was people are underbidding a lot lower compared to now. Again, this is a chart just for the sake of guidance and information only. So, condos, big time trouble in GTA, but a great time for investor to look into it. It may gonna go, it is right now down. Everybody's turning the blind eye on the condos. In my opinion, they might be one of the best time ever, especially 2-bedroom condos. Instead of single small condo, less than 400 square feet, 300 square feet, they are up in big trouble. But other than that, the 2-bedroom condos are still selling very well, and they still present reasonably good rent altogether for you. Again, do your search. BC is going to start launching new tax. That tax is going to be from 2025. If you bought a piece of property and you do not keep it for 7 or 30 days, unless otherwise you have circumstances, you're subject to, or if there's a gain of 20% income. Same thing, it was going to be adding up the flipping tax on top of it. Now, moving forward, there are a lot of realtors working on this scenario called cashback. Be aware of it. Some realtors like to offer a lot of money. There are some companies based upon that, again, service versus, the cashback. Who's going to be the biggest builder? First Nations. First Nations is going to be the biggest builder in Canada, by the way. They are building 11 skyscrapers in Vancouver. They're also doing something in Winnipeg at the same time. And they're building quite a number of homes altogether in Canada. Next thing we're going to talk about BC. We'll talk about it. Edmonton. And that's one of a city in Canada, which is going to offer you a building permit within a day. It's auto review program, by the way. This is one of a kind. Hopefully other cities will pick it up, and hopefully they take advantage of this one as well. Those who are not familiar with it, if you're looking for a quick coaching for 15 minutes, just text your name at this number, 416-409-7300. You will get 15 minutes of a free coaching at no cost to you. Just thought I should share with you. Rents are dropping, by the way. Just thought I should let you know that rents are dropping because, as I said earlier, that in last quarter of 2024, about 250,000 Canadians, non-Canadians, people who do not have the PR, have left Canada, and there are a lot more leaving as we speak, though. What is 2033 rule for buying a home in Canada? Make sure you put it 20% down. Make sure that the property you are buying has less than 30% of your gross income, and you do not buy a piece of property which goes beyond 3 times your gross income. Please don't break it. It is very, very conservative. You're going to end up making or saving yourself a lot of dough. What is a 50-30-20 budget, by the way? 50% need, 20% saving, 30% wants. Again, there's also a formula called 75-15-10. Be aware of these formulas intend to put you in a very solid position. You are never going to be on the slippery slopes. A lot of people have borrowed money and property values went sideways and they end up filing bankruptcies. Saskatchewan is offering 30,000. It's a small town called Musumin, and I believe they already reached their limit, but just check it out. They're giving $30,000 if you're going to build a home, and if you're going to add up another unit, it'll be another $8,000. Moving forward, most of you are aware that we also have this YouTube video that in case you want to borrow money and add up in the rental unit on your property, you can do so regardless, though. Ontario renovation program, by the way, which is going to be starting soon. Doug Ford have announced recently that they're going to be giving you 30% rebates towards home renovation for the energy efficiency, though. Financial literacy, this is a trouble area. A lot of Canadians who are well educated may or may not have enough education. One of the key elements we always focus on, hey, become an educated investor, though. Warren Buffett said something very beautifully. Risk is not about investment, it's not knowing what you're doing. Now, educate yourself, gain experience, understand the investment, taking control, and make sure you continue learning. Risk factor tend to go less and less when you educate yourself. The most dangerous question people don't ask, who should I get the guidance from? When is the most beautiful time to invest in real estate? What are the most suitable locations? What are the effective strategies to get into real estate and get out? And it's important for you to get an education first. It's important that you do that. It is going to save you a lot of hassle. For wholesaling, wholetailing, house flipping, and buy and hold. Wholetailing is simply buying a piece of property and putting very little money into it. It's more or less cleaning up and painting it. A lot of people do that. Wholetailing works extremely well. Wholesaling is mostly like assignments that can be done. Be careful. Make sure you have proper legal advice. House flipping, where you buy property, fix it, and then you sell it. There's a good profit to be made as long as you have upfront money and you have the plans how you increase the value. Buy and hold are the great investment opportunities where you want to buy property and won't sell it until it's 10 times the value. You want to enjoy the cash flow and all the tax benefits. We have class coming up on 26th of January. Those who are interested in it, just text us its number and we'll be happy to take you there. I just want to say thank you very much for those who are attending it tonight, and we look forward to see you. Take care.
Thank
Good
you.
night.
Good night, everybody.
Night.
Excellent. Okay.